We will kick off. Look, first of all, I'd like to welcome all of you. If you've just joined us, welcome. Welcome on behalf of Advivo to a special webinar series that we're running in conjunction with their new financial partner as well, Virtual Financial, which I'll introduce Adam very, very shortly. Now, our topic, we're talking about how to retire early and protect your family. And for those that missed my name just before, my name's Paul Jansen. I'll be your host for this afternoon. Look, we should run for about 25, 30 minutes. So our goal is not to keep you online for too long, but we certainly thank you for being here. This is a really interesting one for me as well, because having sat on a few of these before and listened to guys actually talk about retirement and protection is an interesting one. So hopefully all of you enjoy this as much as what I've enjoyed in the past. Now, Leon, Stefan, I might get you to kick off, mate. And I'm straight off the bat, on behalf of obviously Chris, Dale and yourself at Advivo, I might get you to welcome your clients.
Yes, thanks, Paul, and welcome, Adam, as well. Thank you, all the clients, for joining us that have come on board today, and a few other referral partners as well. Look, first off, before we get into this is the first time that many of you would have heard the name Virtual Financial or Adam Basurcevic. For many years, we've been rather annoyed that the ATO made some legislation, ATO ASIC, sorry, made some legislation a number of years ago, which meant accountants couldn't give advice around self-managed super fund where we could before. And over the years, we've tried to deal with it with general advice. We've looked at other solutions, etc. We've looked at partnership arrangements, and we kissed a lot of frogs, to be honest. We couldn't find the right person that and right organisation that was aligned to our goals, that understood what we were about and how we are predominantly a business-based client and what business owners look for. Adam, who's nodding sagely there, is an accountant by not practicing as an accountant anymore, but he's an accountant background, so he understands where we come from. He understands business, and we now feel that we can better help our clients with their wealth management, risk management, retirement planning, because we had to try and give no advice or general advice to things that we knew the answer to, but we were prohibited by the lack of a financial services license for being able to give that advice. So we now have a solution, and the general advice would get people so far, but then you need more detailed advice around the detailed strategy, the implementation, maybe products, and then you also need follow-up and maintenance of what you put in place to make sure it's still performing as you should be. So there's some of the topics that probably we sort of touch on as we go further forward to this, but I'm glad I kissed the frog, Adam, and he's now, he and Virtual Financial are the Advivo financial planning partners and available to help our clients with any of those needs. After this meeting, we will send out a bit of a follow-up, which will have some more details and Adam's contact details and the rest of his team that's available to help.
Brilliant.
Back to you,
Brilliant.
Paul.
And well, before we introduce Prince Adam, let's get into the topic of early retirement and protect our family. Mate, so tell us quickly, why did you end up choosing Virtual Financial? I know you explained all that, which was fantastic, and it's so true nowadays with the legislative changes. You're unable to give advice unless you have an AFSL. So tell me why you chose the partnership with Virtual Financial.
And I suppose, as I alluded to just before, it wasn't an easy decision. We've talked to a lot of people over the years, so not a decision that we just flippantly made. And then once we met Adam, we had a number of meetings with me initially, and then Chris and Dale, just to make sure it was the right fit, because people go to people for advice that they have an affinity with and an alignment. So Adam, with his accounting background and the way in which he and his team approach advice, they're not just product pushers. They have a broad, holistic view of helping people out, understand that there's some tax incentives, understand that you need risk. So he ticked the boxes after going through a fairly rigorous due diligence, and which was not just technical. A lot of people say they're technical, but they've got to be people that will have what would you say, an affinity and can relate to our clients. And I thought Adam ticked those boxes. Yeah. And he's only just down the road as well, which we'll talk about later on as well too.
Well, that's exactly right. Just up the road from you at he's in Adelaide Street, you're at Ann Street, so pretty close for when you need that client interaction as well. That helps a lot, doesn't it?
It does.
Yeah.
Because quite often we will have joint meetings, I assume, so that helps to get together. Yeah.
Correct. Now, before we get into Adam, and before we, there's a series of different questions we're going to go through with him as well. Maybe let's start with why is a retirement plan is so important from your point of view and for your clients?
Actually, I saw an article from Adam only recently on this about how scary the number was that people don't have it. But remember our client base and those of you that are there listening will understand that most people in business are a little bit more entrepreneurial, and we all think in business that our biggest retirement, we have a couple of big decisions that we make as far as financial. It's usually a house and our business. And a lot of people in business think that their business will be their retirement nest egg for the future. Now, that doesn't always happen. We have GFCs and all sorts of things that can happen that can bring that unstuck. And we'll talk about, things like marriage breakups, accidents, all sorts of other things. So making sure there's an old saying, if you don't plan, you plan to fail if you don't plan. So you really need to think about what you're going to do, the timing, the actions you need to take. And on the other side is you've got these days, and superannuation as it goes up again in the percentage you pay. So everyone now has a bigger lump sum of super accumulating all the time. So that super nest egg that you have there, besides your business, needs to be managed and appropriately, and part of a strategic plan to make sure that when you do think you want to retire, you're going to have the right amount to retire, look after your family, and do all the things you want, whether they be holidays, trips, golf, etc. But if you don't plan and have some milestones, and really it's like we have our monthly service program with clients, unless you've got someone that's looking over your shoulder and probably giving you a bit of a nudge saying, hey, hang on, you need to do this. Quite often we don't do it. We all get very busy in our own businesses and our own world. So that's what Adam and his team are there to help make sure happens.
Yeah, so true. And you think about it, and I don't know, we tend to go through this little transition of every year seems to go quicker, and you go, well, next week's May. How the heck do we get to May? So you're spot on with that in terms of, life is getting busier. So doing all these little things are so important to make sure that, we are planning. And as Adam will always say, and we're going to get to him very shortly, he likes to do this on an annual basis and make sure you sit down. And I think Adam, hopefully I'm not misquoting you here, but we're going to introduce you shortly, but he talks about taking a day out of the year to sit down and plan for your financial future. And what does that look like? And you do that with your partner, your husband, your wife. Do that with the kids if you need to as well. You can easily sit down with them. So they're all the little tips and tricks that hopefully you guys will get out of this as well, which is going to be really important.
Yeah, certainly.
I don't want to steal Adam's thunder, but I know he's got a very good planning tool that helps people work that out and where they sit and everything like that. Sorry if I've stole your thunder. You're probably going to.
No, you're right. No, you're right, Leon. We've got the best software in Australia, so it really works out not just numbers, but also pictures. So most people are much better off looking at pictures, and we have nice graphs and colors and everything else, but we also have the numbers behind it. So, like what Paul was saying was, we say to our clients, take one day off a year. Everyone's busy. I've never met a client that says, Adam, I've got all year free. Let's lock in a day. We say to our clients, lock in one day with your husband, your wife, whatever it might be, and take the day off. Go to a cafe, go to your favorite cafe, go to your favorite restaurant, and sit down and go through your financial affairs, which might include, have you done your will? How's your super performing? How's your budget looking? So look at all the different areas. Has your tax return been done? Have I been to go and see Leon? How's the monthly meeting going? So we really encourage our clients to take one day off a year. A lot of our clients now are doing that, and the feedback's been amazing. The clients just say, hey, we've never thought about that. And taking that one day off a year, we feel so much more relieved. And then once we do the retirement plan, that gives them even more comfort in regards to their financial affairs.
Yeah, it's a good point.
We should talk about if we can make that a tax deductible if they go away for it. It's like going to something. And
Yeah, exactly. Look, there is talk that in July this year, it's going to Parliament. They're looking at changing a financial plan to be tax deductible going forward. So the government's realised that they've finally come good with the ATO and said, hey, we realise that it's maybe not a tax deduction, but they're looking at making it a tax deduction. So to encourage more people to do a financial plan, which I think was one of the best budget ideas I've seen in a long time. So I really hope that one gets through. It'll be fantastic because then, yeah, when they do go to the cafe and then they do a financial plan, it'll all be tax deductible.
It's a good point. Now, mate, while you've jumped online there, which is fantastic, and everyone's had a bit of a chance to listen to you and see you, more importantly, with great branding behind you there, Virtual Financial. Mate, maybe if you give everyone online a little bit of maybe a 60-second, who are you? Tell us a little bit about you and what drives you in your role at Virtual Financial.
Okay, thanks, Paul. Well, as Leon said, I'm actually a CPA qualified accountant, so I'm a fellow of the CPAs. I started my journey as an accountant. I worked as an accountant in some big firms in Melbourne and so forth, and I'd worked probably as an accountant for 20 years. Unlike Leon and Dale and Chris, that really loved their work, I kind of got a bit bored with talking about tax and talking about stuff that happened last year. I got a real kick out of helping people with their retirement, with their future cash flow, with their super. So I suppose I jumped ship and went from being an accountant to a financial advisor because I saw a big need for it. There's been a big change in our industry now where, you know, the Royal Commission's come through and you have to have a degree now and so forth and a professional year to become a financial advisor, which is fantastic. But back when I first started in financial advice, back in the early 2000s, I saw there's a great need for financial advice because there weren't a lot of qualified people in that area. So my firm specialises just in financial advice. That's all we do. We don't do tax. We don't do home loans. We don't do anything else. We just specialise in financial advice, self-insurance advice, and retirement planning, and insurance. And we really try and help our clients. As our slogan states, is to provide affordable financial advice for all Australians. So one area I noticed was that there's a lot of, because the financial planning world's gone from 28,000 advisors now down to about 15,000. And of that 15,000, 3,000 are stockbrokers. So there's only about 12,000 advisors throughout the whole country now. The banks aren't doing financial advice. Banks don't want to touch retail clients. So a lot of advisors now are charging an arm and a leg to do advice. And we want to make sure that, all Australians can get advice that's appropriate. And we have, as Leon said, we have the best software to show them where they are today and where they'll be in the future.
Great, mate. And look, it's great to have you here, and it's great to be able to talk about all these key things, because while they're spoken about, and you mentioned wills before as well, and there's wills and there's wills, and I think there's so many different permutations to that to make sure that you are protected. So let's maybe start off with the second part, which is protecting your family. And I've seen you speak about this before, which is fantastic, and it sort of resonates a lot. And you think about the things that we do protect. We protect our homes, we protect our cars, we even protect our pets nowadays. But we tend to forget about our family. So why is this important?
Well, it's quite amazing. What the stats really amaze me is that 87% of people won't reverse out of their driveway without car insurance, and it's a fact. However, what people don't realise, the average claim of a car accident is $3,000. So basically, on average, you're just risking $3,000. However, 90% of people, only 10% of people have income cover, but 90% of people will reverse out of their driveway, go to work and go wherever they might go, and not have their income covered. And if you're 40 years old, you've got 25 years left to work, and you're earning $100,000 a year, without indexation and everything else, you're risking $2.5 million, not $3,000. And, an income protection, as Leon would tell you, is tax deductible, so it's tax deductible, it protects your income. 13% of bankruptcies happen because of people that don't cover their income. They get sick, they can't work, they can't pay the home loan. No one's coming to save you. You've got to help yourself. And that's what we try and do. We, our strap line there, it says on our screen, it starts with you. So we really work with our clients, and we try and get our clients engaged. And it's not just about all about us. And to, as we might talk about a bit later, we get them to fill in questionnaires and see where their weaknesses are, and we just try and help them.
Yeah, and I think you mentioned it before, just when you were talking about did you say world-class software? Is that what you said? Or did you say the best in Australia? I'm not sure.
Yeah, best in Australia. Like, I mean, in my opinion, the software we use is second to none. Yeah.
It is. And for everyone online, we'll when we do a follow-up, just to say thank you, we'll send you the link as well. So you've got the ability to access this as well. And it's just a free questionnaire. It's something that I do every 6 months. Funnily enough, I did mine last week with Adam, where I've just gone, right, it's a 5-minute questionnaire that is outstanding because it makes you think about what you do have and maybe what you don't have, more importantly, and then you can choose what to do with that after you filled in the data as well. So it's all your choice, but the fact is it gets you thinking about, do I have this and do I have that and where am I for that? And you know, sort of far enough, we're going to talk about a retirement plan in a minute. So
well, can I just jump in with something on what Adam was saying there too? Because as I said, most of our clients and people listening here are in business, and I come from a corporate finance background, and I look at risk all the time. And poor Chris and Dale and the rest of the staff have probably heard me 1,000 times say, well, what about if you get hit by a bus and all of that sort of thing? You know, and when I do valuations, risk is really an important part of it. But for clients who are in their own business, not only is the loss of income really important, if they get injured and unable to work, it could mean what we were talking about right at the very beginning. It could be detrimental beyond catastrophic stage to the capital value of their business as well. So, because a lot of businesses in the SME sector are very heavily dependent upon the principles of that business. So it is really important to have, you know, life and income protection, permanent total disability, because it could mean the difference between not only your income but the loss of your business.
Yeah, I think like there's key person insurance, you know, which obviously it's great for a business to have key person insurance, and in most cases it's tax deductible. And then you've got the buy-sell insurance, you know, so if you've got partners in the business where you can, you know, obviously get paid out. So yeah, we definitely specialize in business insurance as well, and we can definitely help clients create a plan. And you know, we work with lawyers that do buy-sell agreements. And yeah, look, it's very important to have yourself insured. We've seen it numerous times where, you know, businesses haven't had insurance and it hasn't been good, or they've had insurance and it's just been maybe a third of what they actually needed. So yeah, so I think,
and that's a really good point of what that's a really good point, because they might have it, but is it to the coverage that it should be at? So that's a great point.
Yeah, well, I had one client who had it, never made an effort to kind of increase it or come back to us for a review, and then unfortunately he passed away, and then the other 4 partners had to pay out the estate for about 5 years, you know, in regards to the other balance of the insurance they didn't have, you know. So
insured.
Yeah,
remember that, Chris and Dale.
You know, so make sure Leon's insured for a lot of money. But yeah, look, it's really important, and you know, we see unfortunately where people aren't insured. I think the problem is that everyone thinks they're bulletproof. No one thinks anything's going to happen to them. That's the whole problem. You know, it's always going to be somebody else.
Yep. But unfortunately, there are those stories, and sort of whether it's post-COVID or not, there are stories, and it's probably touched most of us now. There'd be one person that we'd know that has got very sick and ill in their 30s, early 40s, passed away before 50. You know, they're there. So we shouldn't be thinking that we are bulletproof, because we're living in a totally different world, different society nowadays.
It's not a matter of your age or anything else like that. No, there's
correct
a lot of fit people that have heart attacks. Yeah.
Spot on. When your number's up, your number's up.
And the easiest way to find out is to just go to a hospital, because when you go there's lots of sick people.
Yeah.
It makes you realize, you know, the hospitals are packed.
Now, talking about numbers for a second, and again, we've spoken about this, Adam, in quite detail, but it's a staggering number of how many people do not have a retirement plan. So again, a key part of this little webinar series is to talk about retirement. So maybe you can explain for us what actually is a retirement plan.
Yeah, so what we do with our clients, it amazes me that, you know, even we pick up a lot of new clients And the reason why we do is because we do retirement planning. Even clients that have a financial advisor don't have a retirement plan, which is kind of hard to believe, but it's what happens. I always tell the story that, I was at a medical conference once and the CMO said, if you ever go and see your doctor and he doesn't take your blood pressure, I'd see another doctor. And I say that to people that aren't clients of ours, that, if you haven't got a financial plan or retirement plan, and some clients are paying, $8,000, $10,000, $20,000 a year, and they've got no idea how they're tracking. So basically what our retirement plan is, our clients fill in the 5-minute questionnaire. They fill in what we call an all about you questionnaire. It's all online. They send it through to us. From there, we evaluate it. We work out where they're at today, where they'll be in the future, how that all looks, with the insurances coming out of their super, with obviously superannuation guarantee going into their super. We work out returns of about 6%. Our fund's done anywhere between 8 and 12, so we're very conservative, and we look and see where they are today and where they'll be in the future and how that looks. And what a lot of clients don't understand is that it's not just your money. Obviously, where clients have got $2, $3, $4 million, obviously probably not looking for government handouts, but people that have got under 900,000 in super, there's a lot of strategies we can use to get a lot of money out of the government, and even if it's just $1, then they're entitled to the concessional cards, and they get cheaper rates and cheaper pharmaceutical, and it can really pay. And there's a lot of different strategies we use to help our clients. And generally speaking, I reckon probably 8 out of 10 of our clients that before we start doing retirement planning, they think it's all doom and gloom and things aren't looking good. But once we've done the plan and we show them the strategy going forward, 8 out of 10 clients go, oh my God, I'm actually not that bad off. I've had clients, it's quite amazing, really. I've had clients that have been in my office and said, oh, so I can retire today. I said, yeah, you can. And they've retired that day, and they thought they had another 10 years of work left. So it's just a matter of having the right strategy and knowing, obviously, all the strategies that go, like we use annuities a lot, and for our clients, a fantastic investment at the moment, because you're getting a virtually guaranteed 6% from an annuity, which is guaranteed, and then that boosts up your if you qualify, boosts up your Centrelink and your government pension. So you basically get like 8 or 9% guaranteed income for the rest of your life, which is not bad. So let's touch on a couple of those little things that you just spoke about. So what's considered a comfortable retirement from the government? So the government say that for a couple, it's about 69,000 and 49,000 for an individual. So we always try and increase that up. So we try and increase it up to maybe 80,000 for a couple, to make sure they've got one really good holiday every year, and maybe 60,000 for a single person. But we work through all that, depending on their age. We can kind of factor in, okay, a lot of our clients, we work on contribution strategies. One big strategy, one massive strategy we do with a lot of our clients, and I'm sure Leon, Dale and Chris are using it, is catch-up contributions. So on their MyGov, they can jump in, they can see. So the government, one of the best laws they come out with is catch-up contributions. So you can catch up over the last 5 years. So we've had a lot of clients that have jumped online. So either the tax agent, so Leon can jump on his tax portal and he can see what the catch-up contributions are, or the client can just jump onto their MyGov and they can see what the catch-up contributions are. Normally, a lot of clients have $60,000, $80,000 where they can catch up and get a tax deduction. So it's a great strategy for high income earners, self-employed people that don't put much money into super. It's a great strategy that we use for our clients to bump their super up. So part of the retirement plan, we use catch-up contributions, we use annuities, downsizer contributions. There's so many different things that we use, but the first part for our clients is to fill in the questionnaires, and from there we then have a Zoom meeting, or we can have a meeting either at our office. So we are virtual financial, but we are a hybrid model. So we're happy for clients to come into our office, or we're happy to go to Leon's office and see the clients as well.
So mate, just quickly explain to me what an annuity is.
Look, it's just really like a term deposit. It's a guaranteed income, and it has a guaranteed withdrawal value. So the great thing about annuities is that only 60% of the capital value is included for settling. So, if a client, for example, let's just say that in round numbers, the cutoff for a couple is about $900,000 to have other assets other than a house. So house isn't included. So if there are other assets, for example, are $950,000, well, then we might maybe do an annuity to get that under the $900,000. So then they qualify for government pension, then they qualify for cheaper rates, cheaper electricity, cheaper pharmacy, cheaper chemistry, the whole lot, So, but again, I mean, it just amazes me. And, the government do such a great job in telling clients, all they talk about is fees. That's the only question. I never had a client ask me anything else except for, what do you charge me? How much is that fund costing? They don't ask any other questions, because the government's done such a great job in brainwashing people. They don't ask questions about, how can I get more government pension? What strategies have you got? We did a client the other day, and basically this client over a 10-year period will get an extra $145,000 guaranteed income. Now, you can just imagine, because he had about $1.1 million of assets. We had to bring them under using annuity, and there'd be thousands of clients like him. The reason why the government don't mention it is because they know if advisors like me talk about these strategies, it's going to cost the government billions. So they bring out these things, but they don't tell anyone about them. Like the catch-up contributions, I don't think I've met one person that knows about it. And I'd be surprised if on our call today, if our webinar today, if anyone even knows about it. So they bring out these great, laws, and there's some really good ones, but no one knows about them.
Because they want it to fly under the radar.
That's right. The government keep it that way because they don't want people applying these laws. They just want everyone to use index funds and to use government, industry funds, because it's all about fees, and yeah.
So you touched on another one just before. So can you explain how it can boost? I think you mentioned the downsizer contribution. How can that boost retirement?
So, especially with the housing market at the moment, it's gone right up. So we've got a number of clients. Government brought in this great strategy where you can put $300,000 of your. So if you downsize your house, let's just say your house is worth $2 million. And you say, okay, well, I don't need to live in this 4-bedroom house anymore. I'd like to live in a 2-bedroom apartment near my kids, so I can be the grandparent, whatever it might be. But the property those properties are only 1.6, 1.7 million. I can downsize and I can put that $300,000 into my super tax-free. So as long as you've held the house or the property for at least 10 years, you can then easily boost up your super and to give you a bit of a kick in your super. So we've got a number of clients that are doing that. They're downsizing, they're putting money into super, and it's giving them a great retirement, like in regards to a great pension. I mean, unfortunately, there are some clients of ours who should be downsizing, but they're just so attached to their house, and they'd rather leave all the money for the kids and live like paupers themselves. But at the end of the day, it's their choice. So, but there's a number of strategies around in regards to boosting up the super, and obviously, a contribution strategy as well. I suppose that's another lead in. One of the other great, so there's probably three great laws. This is the third one, is, and I can't believe the government has even done this, is an amazing one. And again, no one knows about it, is that you can put up to the age of 75 now, you can put money into super. You don't have to be working. You can just, so if you're retired, you're 69 years old, and, you've got money outside super. Obviously, you've got the limits of what you can put in, but, you can easily put in, $110,000 non-deductible, and you can do 3 years at once. So you can, if it's you and your wife, you can easily put in $660,000 to super and pay no tax the rest of your life. So up to the age of 75. So there's a number of strategies around these days. The government's, I think those 3 strategies have been fantastic. And I think the government has done a great job with those. I think the only problem is no one knows about them.
Just quickly before we look to wrap up, because that's a lot, and I think there's 4 key things there just from a government point of view that is worth looking into, and I think everyone can, whether it's this afternoon or whether it's tomorrow, start to look at that and have some sort of a starting platform. What else is unique that you currently do for your clients? Because you mentioned that all your clients do this, and a lot of clients don't have an awareness of that. So, which is fantastic, and obviously another reason why Leon and the guys have chosen you from Advivo. What else is unique that Advivo would have access to?
Yeah, so what we do for our clients is a number of things, but one of the key things we use MDAs, managed discretionary accounts. So the beauty of using an MDA is that we can make changes on MDA. You give us the authority, and we have an investment group committee, that investment committee that look after that fund 24/7. So if they see another GFC coming up, they can transfer it all to cash. If they see opportunities, they can move it around to international, whatever else it might be. And it just gives us that, we can invest in things that industry funds can't, that, index funds can't. As one example, just one quick example, there's probably 100 examples. One quick one, that's an easy one to explain, is we through the MDA, we invest through ArtPay. So what ArtPay is, gives us a guaranteed 9% return. And basically people that are very wealthy, that want to have $1 million painting on their wall, they might own a $30 million house at Toorak in Melbourne, but haven't got a spare $1 million lying around, but they want that painting. They'll go and buy the painting and put it on credit, and then ArtPay lend them the money, and then we get a fixed return of 9%. So things like that, where we can really boost our fund up. Our fund has done incredibly well the last 12 months. The market has been really decimated in shares, but our fund has done very well, and returned over between 5 and 8%. The reason being, we don't just have shares. So we do have shares, but it only consists of somewhere between 40 and 50% of our portfolio. The rest is in alternative assets like ArtPay, infrastructure, property, fixed interest, bonds. So we don't just put it all in shares. So we customize the portfolio to suit the client. So it's not like an industry fund where they just plonk it in with everybody else and just say, good luck, hope it goes well. We tailor make the portfolio for the client. So for example, if they have a self-managed super fund, they already have a property of $500,000, and they have another $500,000 of cash. We won't put any of that $500,000 into property. We'd put that into shares and into alternative assets to really diversify the portfolio for them.
Yeah, diversification is the key, I suppose, isn't it, with all of that?
Yeah,
and to us, because as we said before, we're too busy to even worry about that sort of stuff. We hear a lot of noise in the media that sort of points us that way. But I know I saw a learn and lunch or wine, something that you did with with Will the other day, and he was talking about electric vehicles and electric charging batteries and the things that are growing and getting bigger, and your clients having access to those sorts of things. And I know some of the investments.
So
understanding as well.
Yeah, that was Blue Ocean. So
that's right, Blue Ocean.
Yeah, so it's a great investment. So that at the moment is only for our wholesale clients. We are looking at going to retail, but again, what we're trying to do is bring these really good investments along for our clients, not just for the rich and wealthy. We want it for our clients as well. So our clients can invest, if they're a wholesale investor, as little as $50,000. This fund only invests in between 8 and 14 funds across the world, and it only invests in the best companies in the world. So the highest dividends, the highest profit, the highest sales, the highest, these companies all have close to $1 billion of cash in the bank. So they're not going to go broke. Some years this fund's done over 80%. It's averaged 25% for the last 7 years. So they're the sort of investments that we also do for our clients. We have property trusts we do for our clients as well. So we have a number of different, a whole heap of different, investments for our clients, depending on whether they're wholesale or whether they're retail. Depending on where we put them. But obviously we tailor make every portfolio. But the good thing is we do all the work up front, and then we can just let it go, and we have the investment committee manage that for us 24/7.
Clever. Now, before we look to wrap up, and if you've got any questions that might have triggered something along the way, please drop them into the Q&A, because we'll go to questions in about 2 or 3 minutes. So, Leon, before we look to wrap up, mate, I know there's some great things that you guys are currently doing as well with some direct property. I know Adam mentioned property before. Anything you want to share on that?
Look, and this is part of the issue that we have. Like we have to be careful. I can't give financial advice, but I know I am involved in a charity that can provide access to NDIS and SDA housing to people. And I like to do things that's got a double benefit. So you're helping people with special needs, and they've got a specialist way of getting funds from self-managed super fund into NDIS housing, which is not normally available. So yeah, there's some other things like that we can help, which we'll work to channel through Adam, so that advice can get out to people and get those through. Yeah.
Brilliant. Sounds like you guys are very busy there as well and doing some fantastic things for your clients. So it's a bit of a match made in heaven, which is fantastic to see. So to everyone online, if you've got any questions, please throw them into the Q&A bar as I head to Adam for some final comments, and then I'll throw to Leon as well.
Yeah, thanks, Paul. I think my final comment is, look, on our webpage, we have the 5-minute questionnaire. If you complete that, send it through to us. We'll send it back to you with the results. So it looks at 6 key areas. And then what we'll do is we'll send you the All About You questionnaire. And what I'll do as part of this presentation today, I will give a free retirement plan out to any client who kind of does that today, who responds today. I'll be more than happy to do a retirement plan, and I'll personally sit down with them on Zoom or in Leon's office and go through that with them in detail at no cost. And obviously, they want to do anything further after that, then obviously we'll explain any fees or charges.
Brilliant. And Leon, doesn't look like we've got any questions coming through as I have a quick look, mate. Anything as far as final comments?
Look, Paul, thank you for facilitating. Adam, great to have you on board, you and your team. So it's not just Adam, there's a team down there. Look, we're very pleased to now have filled the missing gap that we didn't have in our armory of being able to help our clients out. So the solution is there. So if anyone has risk or investment or retirement planning questions, Adam's contact details will come out, or just contact us. And there's also Eric in our superannuation division. We'll be meeting with Adam to catch up on that. So we're there and we can facilitate the introduction and get you along. We're not doing it for commissions or anything like that. This is just to help you improve your overall wealth position and plan for your retirement and cover all your risks. So thank you, Adam.
No, thanks, Leon. And just the other thing I'll say, Paul, before we finish, is today is just general advice. We haven't taken into account anyone's personal circumstances, or so obviously if someone does want to go further down the track, we need to do a full financial plan to make sure we've got all their bases covered.
And I think that's the thing that people didn't understand when that change of legislation came through. That advice can't be given out willy-nilly. Whenever we have webinars of ours, we always put up that disclaimer. But there's a lot of time in getting to understand a client's needs and their wants and their objectives. So you have to go through that. That's why we can't give advice. So that's why you need experts like Adam.
Brilliant. Well said. So to all of you guys that are online, I can see at the bottom there of Adam's screen there, virtualfinancial.com. So is it .com.au? Your shoulders in the way, or is it just .com, mate? Hello, Adam.
Sorry, mate, what was that? I was reading the webinar chat to see if there was a question.
No, it's all right. I was just saying, is it virtualfinancial.com or .com.au?
.com.au, mate. Sorry.
.com.au. Beautiful. So if you want to jump online, the 5-minute questionnaire you mentioned is on the website. So have a look at that.
It is, mate. Yes.
Or you can reach out to Adam on LinkedIn, and we'll also follow up with an email with his details. But if you wanted to do some research, and everyone loves jumping online now, doing a Google search and having a look at something before you actually engage in that conversation, please do that, because that 5-minute health check it costs you 5 minutes of time. That's all it costs you. So, and I did it last week, and it was outstanding for me to rejig and rethink, and I even start chatting to my kids about what they would like to invest in as well. So that's the conversation I'm having now as well, which is great. No other questions. There was a comment there, which was fantastic. Thank you to all of you guys that have joined us. Thank you again on behalf of the Advivo team, on behalf of Leon, Dale, and Chris. Thank you very much for joining us.
Thanks, guys.